the product which we had created out of a small one-bedroom apartment in Koramangala many years ago came to become a fully regulated product. The biggest mistake I've seen people making is thinking that they can do it on their own without fully understanding the product.
Indian investors are still unaware of how REITs, InvITs, and SM REITs work.
Let's say you and me invest 1,000 rupees each into this, which then collects 1,000 crores and invests it in this asset. And whenever the trust gets rent from the assets, it distributes it to everybody else. And then at the same time, I can also sell these units because they're publicly listed. Here is a way to do it in a more securitized, regulated, liquid manner, which I feel is what appeals to Indian investors. REITs and InvITs have given 85% return. 85% return over the 6 odd years is fantastic.
Hi, I'm Neha Vashisht. Welcome to the Economic Times. Joining us today is Kunal Moktan, co-founder of ALT. ALT is a tech-enabled alternative investment platform that provides individual investors direct access to institutional quality alternative assets. ALT is launching India's first PMS focused exclusively on listed REITs and InvITs. In this episode, we decode why alternative assets are gaining ground and how this unique product is changing the investment game. Thank you so much, Kunal, for joining us today.
Thank you for having me.
Well, the pleasure is all mine. So let's start with your journey first. What is your journey? How did you come here? And what was your purpose behind ALT?
Right. So I started my career in private equity in Blackstone, the largest alternative investment manager in the world. It was in 2007, straight out of business school. I joined Blackstone. We started Blackstone's Asia Real Estate Investment Office in Mumbai. And our aim at the time was to invest in the largest alternate within the alternates, which is real estate. And Blackstone was already a large real estate investor in the world. We had a $10.5 billion fund which we were investing out of at the time. So we targeted rent yielding commercial real estate primarily in India at the time. Invested close to $1 billion of equity in $3 billion worth of assets with different developers and asset owners in the country. We bought with Embassy in Bangalore and Pune. We bought with the Salarpurias in Hyderabad, with Panchsheel in Pune, with the Rahejas also in Hyderabad, and so on, and built a large portfolio of commercial office assets, also some retail, warehousing, etc. And after some point of time, the portfolio became so big that the only way for us to exit these assets were through a REIT. And therefore, we petitioned the Securities and Exchange Board of India and said, look, every other country in the world has REIT regulations. REITs are a fantastic vehicle to securitize real estate. And therefore, it's a great way for introducing normal investors to access real estate in a very small, bite-sized manner.
Right.
And they listened to us, of course. They came up with the REIT regulations in 2014, and the first REIT, which was the Blackstone Embassy REIT, came out in 2019. Most of the assets in that REIT had been bought by me and the team at Blackstone. But by the time I'd already left Blackstone, I left in 2014 because I felt like there was a big gap where we could also give normal individual investors access to this asset class, which earlier was only reserved for the large LPs of Blackstone funds like endowments, pension funds, etc. So we said, look, technology has reached a stage where people are happy investing online, and therefore let's start a platform and allow the largest of these alternates to be invested in by a normal individual investor. So that's how Hashim and I, my batchmate from IIM Ahmedabad, we came together in 2015. We launched a brand called Property Share within the alternate space for people to come and buy completed rent generating commercial and retail real estate. So that did really well, I have to say. I mean, it's been 10 years since we've been doing that now, and we've basically invented a new asset class. We securitized that asset, we sort of marketed it, we structured it, and then the regulator came to us a couple of years earlier and said, look, what you guys are doing in securitizing the smaller form of real estate is really good. We'd like to regulate this industry. Can you submit a consultation paper telling us how we can do it? We did that, but SEBI came up with their own consultation paper. And us being the largest and the founder of this industry, they heard us quite a lot in the framing of these final regulations, which actually came in March of last year. They
Okay.
called it the SM REIT regulations, the small and medium REIT regulations. So the REITs can hold assets more than 500 crores. For any asset which is less than 500 crores, you need to register yourself as a small and medium REIT. So Property Share became the first firm to apply, the first firm to get the license, and also the first firm to come out with the first SM REIT scheme, which we called Prop Share Platinum. That was in December of last year. We listed that on the Bombay Stock Exchange. It was a sort of monumental, sort of rather the culmination of a long and monumental journey that we've had, where the product which we had created out of a small one-bedroom apartment in Koramangala many years ago came to become a regulated, fully regulated product. So it was a sort of a very proud moment for us and the team. So that was quite good. And now that we'd sort of done that, we're coming out with a second scheme, which will also be live pretty soon. And once we've done that, now that it was regulated, we said, look, let's focus back on our original sort of mission, which was to democratize alternative investments to all individual investors. Of course, we've done it for the largest alternate, which is real estate, but there were various other things that we could do. So we launched a global platform for investing in international real estate. The first of which was UK real estate. We buy warehouses in the UK. We've already bought 3 of them on the UK platform. We also have a public market product, which we'll talk about, I guess, where we launched something on the global REIT space. We also have a private credit platform that we are launching, an alternative investment fund. We launched the first one, fully sort of invested it, and now we are fundraising for the second one, where we've already invested part of it, and we'll close later this year. So a lot of alternative investment products are all available on our website, altinvest.ai, so that any individual investor can come and invest in any of them. So that's been the sort of journey so far.
Right. Very well put. Kunal, speaking of alternative assets, let's also talk about why investors are turning towards alternative assets at this point of time.
So alternates were already a very large portion of institutional investor portfolio. Large pension funds, endowments, they were investing a lot in alternative assets. All the Blackstone LPs, the KKRs of the world, the Carlyles, the large asset managers were traditionally raising all the capital from sort of professional investors, which were all these endowments. And the reason that they invested in alternative investments was because it gave better returns with slightly better risk adjusted risk. So, the traditional forms of investment are equity and debt. So, you could either buy a stock or you could buy a bond that was being offered by a company in the stock markets. This is something that's been going on for hundreds of years. But the reason it's called alternate is because these are products which are not traditional, in the sense that they are not equities and bonds. All these other things that I spoke about, real estate, fund of funds, hedge funds, private equity funds, real estate funds, etc. And to answer your question, the reason now retail investors have also started looking at it is because they've seen the performance of these alternative funds over the last 20, 30 years. Just talking about Blackstone, because I worked there, they've given tremendous returns for the investors over the last 30 years. Their assets under management have gone now to more than $1 trillion. So that's a huge sort of chunk of the total alternative market. 15% of the total investment market today is alternates, and it's still quite low in India. But India has seen a large growth in this market over the last, especially the last 5, 6 years, where the assets under management have gone to almost $150 billion from $30 odd billion in 2019, a 33% CAGR. So now more people are therefore investing in these alternative assets for the returns and the risk.
Do you think that Indians are turning towards alternative assets because they are actually quite traditional in their roots? Because a lot of people earlier used to only put their money in FDs and stable assets, and real estate is also one of the most stable assets out there.
Yeah.
But this is like buying in a fractional way. So,
Yeah.
do you think that because Indians have a very traditional approach towards investments, this is slowly picking up in India?
That's one of the reasons I would say. Of course, Indians have been very traditional in their investment approach, which has
Hmm.
always held them in good stead, which is great. But at the same time, I also feel that as Indians, we didn't have access to these products before. We only had access to the traditional
Hmm.
sources of investment, which is fixed deposits and equities. It's only the bull run we've had in the last 20 years, where the Sensex has gone from 3,000 to what it is today,
Yeah.
and the advent of international money into Indian markets, the opening of the Indian economy, and so on, that we've had now more access to these products. So I think it's a bit of both.
Hmm.
But now that we do have access to these asset classes, I think Indians are also looking at buying them, because Indians have always loved real estate. Indians
Yeah.
have always invested in real estate in some form of or another. But here is a way to do it in a more securitized, regulated, liquid manner,
Hmm.
which I feel is what appeals to Indian investors today.
Absolutely. So, Alt currently has $200 million in AUM
Mhm.
and has more than 3 lakh users as well.
Yeah.
What public market products does Alt have right now that Alt is offering to the investors out there?
Right. So we have a separate sort of arm called All Public, which looks at all publicly listed
Hmm.
alternative products. The first product we launched here, which I touched upon briefly in the introduction, was we invest in globally listed REITs in the
Hmm.
US, Canada, and Europe and the UK, which we started as a pilot a couple of years ago, and that did really, really well. That gave us really good returns. And then we said, look, now that the Indian markets have also developed in a way that we have enough of a universe to invest in these
Hmm.
assets. We have four very large REITs. We have five large InvITs. We've got two SM REITs now, both of which were property share.
Hmm.
And together, the REITs are about 12 billion market cap. The InvITs are about 25, 26 billion. So, compared to the US, which is 1.3 trillion, we are still sort of long way away. But the regulator sort of really sees this asset class as being something that could become much larger than equities or bonds, and which may be right, because one more REIT is now coming up, the large Salarpuria Blackstone REIT, and then we've got others who are interested, Bagmane and so on. We have
Hmm.
a lot of real estate that can be securitized in the country. So I feel like over the next few years, we'll have more and more REITs and InvITs which will be monetized and securitized and offered to the Indian investor. So we therefore, the second product that we are launching now on the all public side is a portfolio of these REITs and InvITs, which
Okay.
we are going to curate for the investor, because as someone who's been really close to this industry for the last 20 odd years, I've pretty much seen how this industry developed. We petitioned for the first REIT regulations, like I said, with SEBI back in the day, and the underlying asset, which is real estate or infrastructure, is something that I have invested, or team has invested for a very long time. One of the three asset classes, the SM REIT, we pretty much founded that asset class
Hmm.
ourselves. We've listed the only two that are currently available in the market. So we are very close to the market. We feel like we understand this asset class really well, and we could therefore provide the investor who's looking to invest in this asset a very good a mix or a curated portfolio of assets to invest in.
All right. I think in today's time, a lot of Indian investors are still unaware of how REITs, InvITs, and SM REITs work. So,
Yes.
could you explain for the audience how REITs work, how are InvITs and SM REITs different from traditional products out there, whether we talk about equity or we talk about debt?
Sure. So, at a very basic level, what we are trying to say is that here is an office building. It
Hmm.
costs, let's say, 1,000 crores to buy this office building if you were to buy it yourself. It's got great tenants, multinational tenants, maybe Goldman Sachs, Apple, JP Morgan. And the only way to buy this is, therefore, if you have 1,000 crore corpus
Hmm.
to invest in, and then you hold this asset for 4 5 years and try to sell it to somebody. So, for a normal single investor to do it is almost impossible.
Hmm.
And therefore we say, okay, you know what, why don't we just securitize this asset in a way that it becomes accessible to the normal investor. So in that way, what we do is we sort of put a wrapper around this asset. We buy this asset through a vehicle.
Hmm.
Let's say it's a trust in this case, and the trust then issues units to a normal individual investors through an IPO or some form of share sale. And then when that happens, let's say you and me invest 1,000 rupees each into this trust, which then collects 1,000 crores and invests it in this asset. And
Hmm.
now, as a 1,000 rupee investor, I own, let's say, one unit in this trust. And whenever the trust gets rent from the assets, it distributes it to me and to everybody else. So I
Hmm.
also end up getting that rent for my part, and then at the same time I can also sell these units because they are publicly listed,
Right.
and capture the capital gain in the underlying real estate. So in the most basic form, this is how the REIT, InvIT, SM REIT is
Hmm.
structured. Now, the underlying asset could be a retail mall, it could be a hospital, it could be an office building, it could be a flyover, it could be a road, it could be a power company, it could be anything that can be monetized or securitized. Therefore, InvITs to infrastructure, REITs to real estate, SM REITs to smaller real estate. So that's what a REIT, InvIT, SM REIT does. And these are all publicly listed, they're traded, they're large volumes, and therefore you can buy and sell whenever you want. You get the advantages of equities, which is liquidity.
Hmm.
You get the advantage of a bond, which is a coupon. So here you get 8-9% return on your capital, and at the
Hmm.
same time capital appreciation. So it's a very good hybrid product between an equity and a
Debt.
debt product, and therefore the returns have also been in the middle of these two asset classes.
All right. And I also want to understand why the PMS route for investing in InvITs and REITs.
Yeah, that's a very interesting question. So we looked at a lot of ways to do it, and we felt like PMS was the best way to do it because it's very well regulated. It's a
Hmm.
product that's been around for a lot of time, more than 20, 30 years. The first PMS regulations came in the 90s, and then it's been continuously refined by the regulator. It's
Hmm.
also because it's fully regulated, governance is very high. A few years ago, SEBI changed the regulations to say that PMSs, or rather discretionary PMSs, can only invest in liquid securities, making it even more investor friendly. So when a PMS invests in, let's say, five stocks
Hmm.
in a portfolio, they're all listed. And if an investor wants to exit, they can exit at any point of time. So liquidity is the number one reason that we chose PMS. At the
Okay.
same time, the minimum ticket size is 50 lakhs. We
Hmm.
feel like people who are investing in this product should be slightly more sophisticated. They shouldn't be a student or someone who's just starting off with a corpus of, let's say, 50,000 or lakh or even 10 lakhs.
Hmm.
To understand the alternative sort of real estate infrastructure space, you need to be slightly more sophisticated. So 50 lakhs we felt was a good minimum ticket size
Hmm.
that the PMS affords us. And at the same time, there's all sorts of things that are sort of investor friendly, like client level segregation, which basically means that if you are my PMS investor versus anybody else in this room, each
Hmm.
of your portfolios can be different. They are all in your demat account, in your bank account. So you're not giving in your capital to me to manage separately through a fund. I'm buying all these shares in your demat account, which is linked to your bank account, and therefore you have much more freedom
Hmm.
over these assets. These are the three reasons why we chose PMS.
All right. And talking about PMS, how does this product stand out when we compare it to other PMSs out there?
Yeah, it's another very interesting question, and we ourselves asked this question before launching this PMS
Hmm.
product, and it looks like there's nobody else doing it. So I think the industry is quite unique, and therefore you
Hmm.
need someone who understands this market really well to launch a PMS like this. There are lots of PMSs on the equity side or on the debt side, but no PMS on the REIT, InvIT, SM REIT side. So we are the first one to do it, and that's how we are so different from anyone else. Again, just like we did on the SM REIT fractional ownership side, we are
Hmm.
sort of setting the trend here. We are the first ones to do it. We feel like we have the necessary skill set and the experience to do it. So that's the main difference between this SPMS and others. There's just no PMS like this in the market. But otherwise, of course, the regulations are the same. So everybody has a minimum 50 lakhs. Everybody has a portfolio of assets and so on. So the way we are different is our asset class that we are giving under this PMS is completely different. Of course, our fees are also quite low, given
Hmm.
the fact that ultimately we are a tech platform. We like to give it direct to the investor with
Hmm.
no intermediaries and so on. So all that also leads to better return for investors.
All right. Let's also talk about the core strategy behind this product. What
Mhm.
is the core strategy behind Alt?
Yeah, the core strategy of rather this PMS, Alt's PMS scheme is to find out of the nine, rather 11 listed REITs, InvITs, and SM REITs so far, and that universe could become
Hmm.
bigger. Try to find those six or seven which are the most, which are outperforming the most. So the best REITs. If I need exposure to a REIT market today as an investor, I need to go and research every REIT that there is, every every InvIT, every SM REIT, I need to go and read the annual report. I need
Hmm.
to go and attend all the conference calls, look at all the quarterly results, and so on. Not everybody has the time to do that,
Absolutely.
and therefore you end up making a suboptimal decision. Maybe you just buy, something that you are familiar with. You are in Bangalore, Embassy, therefore you go and buy Embassy REIT. You're in
Hmm.
Hyderabad, Mindspace or Gachibowli or High Tech City, you go and buy Raheja REIT. But that may not be the most optimal strategy for an investor. Therefore, we've come up with the strategy is to come up with our own curated portfolio of these REITs and InvITs. Try to figure out a way and say, look, we need to buy 10% of this REIT, 15% of this InvIT, 5% of this SM REIT, something that gives the investor what he is looking for, a higher
Hmm.
yield or maybe higher capital appreciation and so on. So our investment strategy is to find those high performing REITs, InvITs and SM REITs within this space, and then try to see what allocations to give to each of them in a
Hmm.
way that it gives higher risk adjusted returns to the investor.
All right. Why should investors choose Alt as their partner for this product also?
Yeah, so I touched a little bit about this in
Hmm.
initial bit of our conversation, but the reason someone should trust Alt is because we are one of the sort of founders of this industry, having founded the SM REIT asset class. We've been
Hmm.
doing this for the last 10 years at Property Share, and before that, of course, in Blackstone, I was doing that at an institutional level for 7 8 years. We've got people who've been investing in this asset class for many years and decades, so we've got the necessary experience to do this for investors. We've got the on ground knowledge, having started this product from scratch, and therefore we are very familiar with every asset that's there today in the big cities of India, whether it's the NCR or Bangalore or Hyderabad, Pune, the large IT hubs where
Hmm.
all these GCCs are setting up and transactions are happening. So we've done uh, hundreds of transactions in the team on some of these assets. So that is something that we can pass on to the investor. We are adept at analyzing the right investment theses for each of these assets and crystallizing it in a manner that is, like I said, optimal for the investor and the
Hmm.
returns that he or she is looking at. So, the experience, the structure, the infrastructure that we have, our team, I think these are the reasons why we stand out.
All right, Kunal, let's also talk about who is the ideal investor for this product and
Right?
also how PMS works. In a maybe briefly, you can explain
Yeah.
for people who are new to investments, but they do have money to invest,
Yeah.
how they go about PMS right
Right.
now.
So I'll answer the PMS question first. So like I said, PMS has been around for a very long time. PMS stands for Portfolio Management Services. So to become a PMS, you need to first apply to SEBI for a PMS license,
Hmm.
and that takes some time because there's a lot of conditions attached to giving that license: minimum net worth, the experience of the principal officer and the team, infrastructure in terms of office, and so on. So with any regulated product, all of these are the good things that come with it. So and then as a PMS, you can choose to do either a discretionary PMS or a non-discretionary PMS.
Hmm.
Discretionary PMS is when the portfolio manager makes a decision on behalf of the investor. A non-discretionary is where the investor makes the decision and the PMS portfolio manager simply executes these trades. So you might tell me, buy these four stocks for me and this InvIT. That's a non-discretionary PMS.
Okay.
In that, SEBI gives more leeway, and therefore you can also do some private unlisted securities
Hmm.
because the investor is taking that decision. On the discretionary side, the portfolio manager is taking the decision, and therefore there is lesser flexibility in terms of what you can do. So you can only do publicly listed stocks, for example. The minimum ticket size is 50 lakhs.
Hmm.
The fees are heavily regulated by SEBI. You can't charge any upfront fee. If you're raising capital from distributors or wealth managers, then there's a cap on what you can pay them.
Okay.
Also, you can't pay them anything upfront, which for the longest time the industry was on upfront fees. Now you have to pay them what is called trail, which means that if you are charging 1%, you can only give a percentage of that to the distributor so that both are aligned in fundraising for this product. And PMS is a huge product in India. It's more than, I think, last I checked, 2 lakh odd crores
Hmm.
are invested in PMS. People prefer PMS because it's sort of professionally managed. It's liquid, like I said. You can exit at any point of time, and so on. So that's the PMS. We've been doing PMSs almost for 10 odd years now at Property Share, a little less, I guess. And then, so that's the PMS bit. Now,
Yeah.
who this PMS is suitable for? This
Hmm.
product is the first part of your question. It's a very versatile product. Like I said, it's a hybrid product. SEBI also regulates it through their debt and hybrid securities division. And like I said, it has the characteristics of both debt and equity. So on the
Hmm.
debt side, it's a coupon bearing instrument. So therefore, the rent or the toll collection that you get from these roads. On the infrastructure side, it could be a road with a 15-year concession. Let's say the one that goes to Bangalore International Airport, where you pay a toll before
Hmm.
entering. So you try to forecast how many people will go to the airport over the next 10 years. The government gives someone that concession for 10 years, and then you try to see how much you can make in terms of revenue. So that is then distributed to investors as dividend. So therefore, there is a 7 to 10% yield that all of these assets give to the investor. So that's like a coupon, like a debt instrument.
Hmm.
And then at the same time, the underlying real estate also goes up in value, giving you that 14-15% total return. So if we published a white paper on this industry a few weeks ago. It's available online on our website to see what exactly and how exactly this sort of portfolio has performed.
Hmm.
And it looks like it's exactly how we thought. So since 2019, when the first REIT came about, the equity markets have gone from 100 to about 230. It's 130% return. The government security market has gone from 100 to 145. It's 45% return. Very, I mean, low risk product.
Yeah.
And REITs and InvITs have given 85% return. So it's gone to 185. So it's right in the middle of sandwiched between these two products. And 85% return over the 6 odd years is fantastic. So you don't have the risk of equities, which could be very
Hmm.
volatile. It could go up and down 10-15%. We've seen that.
Yeah.
And at the same time, you're not letting your earnings be affected by inflation, like the way it's done on the FD side. So you might be making
Hmm.
6-7%, but if the inflation is 6-7%, then whatever you're earning is not really giving you any real returns, because it's
Right.
buying the same basket of goods you were buying a year earlier,
Hmm.
because inflation has also sort of gone up. So that way, I feel like this product is great, and therefore it's very versatile and suitable for all sorts of investors. So someone who's in their 30s, who has accumulated some wealth, a professional investor, for them it's a great product. And someone in their 60s
Hmm.
who's retired and who'd like to have some portion of their savings in sort of inflation hedged rental returns, which give you 8-9%, much more than the FD or government securities, and at the same time also give you a kicker on the capital appreciation. So it's sort of a very versatile product that's suitable for everybody, from a professional who's worked 3-4 years and accumulated some surplus, all the way to retirees.
All right. So you mentioned about returns a little bit during our conversation. Let's talk about the returns in a little bit more depth.
Yeah.
What kind of returns an investor can expect from this product?
Right. So, of the three components of this product, the lowest yield is from the REIT. So the REITs are currently giving 5.5 to 6% yield. So if you invest 100 rupees on Embassy, you'll probably get 5.5 rupees per year as dividend. And the reason that is slightly lower is because they also have a small component of their portfolio in under construction and land, which is
Hmm.
allowed. 25% is allowed, and therefore the REIT is not generating any income from that portion of the portfolio. On the other portion, they are generating income. So therefore, their total yield is about 5.5-6%. But at the same time, it also means that because they have land and under construction,
Hmm.
there is also capital appreciation. So to give you
Right.
an example of, let's say, Manyata Business Park might have, out of the 100 acres, maybe 80 acres, which is rent generating. It's tenanted to Target or IBM or Philips. The other 20 acres is currently land which they are developing. So when that comes online, then you get more rents. You also get better capital values and so on, and therefore you make returns from them in the form of capital appreciation. On the other side of the spectrum, there is infrastructure REITs, which is InvITs. They earn a very large portion of their income from dividends. So they give almost 13-14% yields. And the reason that is because the infrastructure trust owns only that concession, let's say in the case of roads, for an X
Hmm.
number of years, like I said, 15 years.
Yeah.
At the end of the 15 years, the government will then auction that to the next investor, which could be
Hmm.
another InvIT. So for 15 years, if you only give me 10%, then I'm only going to get, let's say, a very basic mathematics, 150 rupees.
Yeah.
So I would only get 50% return on my 100 over 15 years, which is nothing.
Hmm.
Therefore, in order to compensate for that, they need to give higher returns. And therefore, they give 13-14% yield, so that the overall return over 15 years is commensurate to other sort of REITs or SM REITs. And then SM REITs are right in the middle. SM REITs are not allowed to invest in under construction or land. They have to invest only in rent generating
Right.
real estate, which could be a mall or a commercial office or sort of a hospital, etc., a warehouse. And therefore, they are around the 8-9% mark. So So if you combine all of these, then there is a good way to generate about 9-10% returns, and at the same time have capital appreciation. That's why, like I said, the returns on these assets will most likely be between your government security or a fixed deposit, which has been 45-50% over the last 6 years, versus equities, which has been about 120% over the last 6 years. So this will be, around 12 to 15% probably every year, same as what it's been historically.
Okay. And in SM REITs, the property is not under construction, right? It's already
Yes.
created.
Yes, it's already created. You can only buy completed rent generating assets.
All right. Let's talk about trust now. So, you're running a high trust financial
Yeah.
product. How do you win trust in a market that is full of noise?
Yeah. So when you first launch a product in a high trust market, it helps to be regulated, and
Hmm.
therefore being regulated, like I said, it comes with all sorts of checks and balances for the investor, including the team, their experience, net worth, infrastructure, and so on.
Yeah.
So that's the first thing that you do. And the first time that you list a product, you want to have experience. You want to have a team which has done this for many, many years and returned money to investors. And that's something that, for example, we've done not just in property share over the last 10 years, but also previously. Let's say when I was in Blackstone, we generated very large return for our LPs through the various REITs and sales and so on. So track record is important. Being regulated is very important. Having an in-depth understanding of the product
Hmm.
is really, really important. So that's how you build trust. And also, you have sort of your advisory committees, you have your board. We've got Mr. CB Bhave, the ex-chairman of SEBI.
Hmm.
We've got Vikas Khadloya, who was the first, or rather the last CEO of Embassy REIT, and the first deputy CEO of the first REIT, who's also on our board. So he's obviously been very, very closely someone who's closely related to the to the REIT market. So when you have sort of industry stalwarts like this on your advisory board advising you, then that builds a lot of trust for investors as well.
Absolutely. What is the biggest misconception you think is out there when it comes to REITs and InvITs?
I think the big misconception is just that it's a very complicated product. People are like,
Hmm.
"What is this REIT and InvIT?" You heard it before, but I don't really understand it. I can understand stocks and so on because they are a company that's traded and so on. But this is a very sort of esoteric product. I've never heard of it. What does it mean? So it's a trust. Why am I getting units?
Hmm.
And the minimum ticket size have been high in this product
Yeah.
initially, although now it's been lowered. So I think that's a big misconception people have, that this is a complicated
Hmm.
product which is sort of not as liquid as other products and so on. But both of these are completely wrong. As Indians, we've been investing in real estate for a very long time. It's just a different way of investing, a much safer way of investing in real estate with liquidity on these units, and at the same time assets that we all know. If we work in Bangalore, we know what Embassy Tech Village, what companies are there. We ourselves might work on Outer Ring Road. We know how traffic has increased there over the last 10-15 years, how more and more companies are coming to India today, the GCCs, because it's sort of much cheaper to do those things here. We've got a great sort of talent pool here and so on.
Hmm.
So it's a great way to monetize that by investing in these assets, and they're very liquid. They're extremely liquid. They can be sold at any point of time. Your money's back in T+2 days. So I feel these are some of the misconceptions, but that's getting cleared over the last few years as more and more of these products have come into the mainstream.
Okay. So would you say that since this product is completely for designed for long-term investors, as you mentioned that it is liquid in nature, so if someone just decides that I want out right now, I don't want to continue in this, would it be like a tough decision for the investor? Would there be any loss? What is the situation when someone doesn't want to continue in REITs or InvITs?
See, the decision could be tough. It could be if they are underperform, if any listed sort of security is underperforming and you need to sell, you need to take that decision, right?
Hmm.
Let's say the stocks crash by 20%. There's a tariff war or something like that. There's always a decision everybody faces. They open their portfolio on money control or their demat accounts and see a lot of red, and sometimes investors panic and then they
Yeah.
sort of sell. That's their decision. That decision is unique to every investor. That's up to them, and that's why you trust a portfolio manager to do it for you, because a professional doesn't look at all of these in a sort of panicky sort of way, because they've been experienced. They know all the biases that could lead to irrational decisions, and therefore they take a more informed decision compared to a normal lay investors who might see his stock going down by 20% and just sell immediately, but there
Yeah.
might not be any reason to do that right now. So that decision, of course, is very sort of unique. But the mechanics of it is all the same. So if you want to exit, yes, you can just go open your demat account, you can hit sell how many ever units you want to sell, it'll be cleared on the stock exchange, and 2 days later it'll hit your bank account. So it's a very liquid product. A PMS in that way is a very liquid product. Like I said, you can sell whenever you want and get your money back.
All right. So, what is the biggest mistake you think people do when it comes to investing in alternative assets?
The biggest mistake I've seen people making is thinking that they can do it on their own without fully understanding the product. Any
Hmm.
investing, Warren Buffett always used to say, don't invest until you know what you're getting into. It's
Right.
rather, he called it the circle of competence, which means that what is your competence? What do you understand? Do you understand real estate? Then great, invest in real estate. Do you understand consumer goods companies? Then invest in consumer goods companies. You know how they work. Maybe you worked in Coca-Cola for 10 years and you know how it works. Maybe you worked in IT for 10 years. You know how Infosys works. You know what the revenue streams are. You've seen their sort of order book. You know who their clients are and how it's shaping up. And therefore, you might be more familiar with investing in tech stocks. So the circle of competence is very important when you're investing. And you need to completely understand the product before you're investing. So if you just go into alternates thinking, look, I know this market very well, I'm just going to invest on my own, then that's a big sort of mistake. The second mistake people make is alternatives have been sold by distributors and wealth managers for the longest time in India.
Yeah.
And wealth managers, sometimes I have to say, they just sort of read the papers and then they go and sell a product in which they are making the most commissions. They are not the most well researched, or some of them are really good, but a lot of the smaller firms are not great at doing research and just telling their clients what is the best way to do it. And
Hmm.
sometimes clients get swayed by that and they just said, okay, fine, he told me this is a good stock, let me buy it. So I feel like a little bit of research is something everybody should do. They should
Absolutely.
understand what they're getting into before investing, and that's a mistake that a lot of people make on the alternate side.
All right. Finally, what is the best way to approach this PMS? How to invest in this PMS product?
Yes, so we are a tech platform, and we've always sold directly to investors. So if
Hmm.
anyone wants to invest in this particular product, then they can just come on our website, altinvest.ai, and there's the right now we're calling it ARIPS, Alt REIT Invest, REIT InvIT PMS scheme,
Hmm.
and they can just click on it. They can look at the entire investment thesis that we presented there, the financial model, how much returns you can make, what kind of portfolio we are sort of selecting, who the people behind alt are, and a brief description about the product, the white paper, the investment note. So we give all the resources to the investor, and then they can schedule a call with someone from our PMS team. They can talk to them about the product, they can understand even more. And after that, we help them on this entire digital journey, open their demat account, sign all the documentation, a PMS agreement, and within a few hours, you could have everything done. You could be invested. So it's as simple as that on the sort of online site. If you want to do it completely offline, let's say you have an investment advisor who helps you, you can also approach us through the investment advisor, our investment advisory fundraising team, which is separate, and we will help your investor understand that product. And that'll be an offline process, not online, where we'll do everything offline for the investor. So just go to the platform and invest.
All right. And is there any option of customization also as per the risk appetite of the investor?
Yeah, so that's another big advantage of a PMS. A PMS is a PMS agreement between the portfolio manager and the investor, and that could be very different from you for you and me, and for me and someone else. If you are someone who's looking for more yield, for example, let's say you're a retiree, you
Hmm.
want more yield and lesser capital appreciation. So you don't want to play for that big 7-8% a year capital appreciation. You want to play for slightly lesser, but you want higher yield because you have your daily expenses to meet or so on. Then we could sort of slightly change your portfolio to include more sort of yield generating assets within these trusts. So we could do that. Definitely, you could customize it for every investor depending on his or her risk tolerance.
All right. Well, this marks the end of our segment for today. Thank you so much, Kunal, for taking our time and joining us today on the Economic Times. It was a pleasure talking to you today.
Thank you very much. Thank you.